Okay. Wee, wee, wee. All right, so I'm Dan, and I'm just going to do a quick video trying to sort of help people understand cryptocurrency. I like to call them crypto assets, um, because they're not necessarily currencies. They're more like, I look at it more like stocks, where you're investing in these different programs. So let's start with the most important one, which is Bitcoin. And Bitcoin is basically it's a ledger that is constantly updated. It's called a blockchain. And the way that it works is the blockchain is fully transparent. It doesn't have like your name tied to your wallet, but your wallet has a long code of numbers and letters. And when you make a transaction, it goes into the blockchain, and then that transaction gets verified by a certain amount of uh, of miners, I guess. Um, And then once it's verified, it gets put into this block, and then they move on to start building another block of data. So basically, the good thing about Bitcoin is it sort of works just like cash would work, except for it's digital currency. So you don't have to carry cash or anything. Your Bitcoin's actually on your phone. So all you have to do is send it to somebody. So if I wanted to give you $20, I could write you a check for $20, which has to go through the bank, which takes a couple days to clear, which might have fees tied to it. Um, or I can just give you $20 cash. That $20 cash, no one can really track that transaction. Once I have cash in my hand and give it to you, that is just an agreement between myself and you. I give you your 20 bucks. That's sort of like how Bitcoin works. Bitcoin is a way to transact with others without the need for a centralized bank. So if I wanted to send somebody, $20 in Bitcoin, all I would have to do is find out what their wallet address was, send it to them, and I think there's a fee, but it's a really tiny fee, maybe a couple cents. Um, and then after everything gets verified, it usually takes about 10 minutes. Then my Bitcoin would leave my wallet and go into the other person's wallet. Nice and simple, super easy. I can keep going about why there's benefits of that, but I want to talk about some other things. So there's another set of crypto, which is like, I think of it more of like a scaffolding where apps and platforms can be built on. So Ethereum is like the number one um, scaffolding, I guess. And what it does is it allows for apps to be built through their secure blockchain. It also they have like little what is called is forks, which is basically it splits off into a um, different platform. So like Polkadot, I think Uniswap. There's a couple other ones that are basically their side chains from Ethereum. But they are the scaffolding, which they provide a structure or platform for apps and websites and stuff to be built, programs to be built. It's sort of like the base internet, where the internet has all this possibility, and then within the internet, people start building apps and websites and platforms for people to patronize. The thing with Ethereum is it takes a little bit of ether, which is their token. It takes a little bit of ether or gas in order to make a transaction. Because what they do is they take the ether and they pay the blockchain miners for doing the work. So it's a good system. The thing is the gas tends to be a little high, But they just did they're working on Ethereum 2.0, and they just did an update, so that should help bring the cost down. So after that, we would go to a thing called stablecoins. Stablecoins are supposed to be stable. They're supposed to stay at a same price, because if you watch the crypto markets, it's very volatile. The prices can swing 10, 20% in a matter of minutes. So what a stablecoin is take the USDC stablecoin, for example. It's supposed to be backed by the US dollar and reserves, bonds, stuff like that, in order to keep it pegged at a dollar. There's Tether does that. There's DAI does that. There's Binance USD. So what they're supposed to do is they're supposed to stay at a dollar. So they're supposed to be stable. Hence the name stable coins. And that's, I mean, what I use it for is when the market drops, if I have any gains I'm trying to hold on to, I shift the profits into the stable coins, wait for the market to drop, and then buy back the Bitcoin or whatever at a lower price. I must say I'm not a professional trader, and I'm not giving you advice or anything. I'm just trying to explain these little different aspects. So there is also DeFi coins or platforms. So Uniswap is one of them. SushiSwap, PancakeSwap. There's Compound. All these are decentralized platforms in order to. They have like liquidity pools where you can stake your asset in there, and you get paid a certain interest rate. It's usually much better than the banks. But you get paid a certain interest rate just for having your money staked into that liquidity pool. DeFi is new, so it takes a little time to get used to it. It feels a little rogue because like it's decentralized, so there's not a whole lot of like oversight going on. Some of these companies are even they just have walked away from controlling the program, and they just allow everything to function on its own. And they use staking methods in order to decide who makes decisions on how the platform is going to run. So you can buy tokens in a particular platform. If you have a certain amount of tokens, then you will be asked to help make decisions to vote on how the platform runs going forward. Very interesting idea. I like it because the central banks, they have a lot of power at this point. So when everything's decentralized, it's more or less up to the people using it, and it's less about whoever's up top looking down, thinking about how the things are going to run. And I think that will do it. If I think of any other ones, I'll just come back and make another video. But those are just the basics, like a crypto assets 101. There's Bitcoin. It's basically a ledger that is constantly updated. It's available for everyone to see, but it's a person-to-person transaction. Ethereum is more like a scaffolding or a structure for platforms to be built off of. And there's stable coins, which stable coins are usually pegged to $1. And then they're backed by reserves or they're backed by bonds. There are even some stable coins backed by gold. And then there's DeFi apps, which are decentralized finance apps, Uniswap, SushiSwap, PancakeSwap, and they allow you to earn interest, or they allow you to make trades without a decentralized institution there. So, if you're interested in cryptocurrency, or you want to learn a little bit more, I have a few links in my profile You can check them out. There's some for books. There's some gear. There's my reference links in order to sign up for Coinbase or Binance or whatever if you choose to invest. So I hope this video helps out, and I'll see you next time.